When you're trying to analyze a stock, there could be portions in that stock where the stock is down is because earnings are down or their competition is getting better than them, or probably from a dividend perspective, either they stop giving out their dividends. There could be a lot of factors attached to it. But what's interesting about Bitcoin is it's not a company, it's a piece of technology. The difference though also for supply and demand for crypto is that it's more amplified because it's a new asset and it's more volatile. Hey guys, so I'm headed home. I'm just walking home. I had some coffee, but I came from a conference where I was part of the panelists, and one of the questions that was sent to me also was this. There were a lot of things that happened over the past few days, and cryptocurrencies dropped, primarily Bitcoin. They asked for my opinion and my sense towards all of this. We need to realize that there are two things that are moving towards Bitcoin. Number one is its price, which is volatile. And please do note the drop that we saw also towards Bitcoin had really nothing to do with Bitcoin. Prior to all of this also, it was already dropping because of high inflation in the US, raising of interest rates, and generally the stock market also has been down. You notice it, the drop in the entire cryptocurrency space right now was triggered by FTX, Alameda Research, some Bankman-Fried. And if you also look at it also, a lot of the tokens that were highly connected to Alameda Research and Sam Bankman-Fried, similar to Solana, were also down. It wasn't doing so well. It wasn't performing well. But when you have a 32 billion US dollar exchange company crumble and collapse in a matter of 2 to 3 days, and it's something that's crypto related, you would see that all of the other cryptocurrencies would be affected and hit. And that's why Bitcoin dropped below the 20,000 support range, hit somewhere around 15,000, and by the time of this recording, it bounced to somewhere around 17,000 US dollars. The price, similar to any other asset, is driven by supply and demand forces. Meaning, when everyone's fearful, there's more selling. When everyone's fearful, people would want to sell even at a lower price, even if they lose money from that particular selling. When all of those factors are involved, more sellers bring the prices down. And that's what we saw. The difference though also for supply and demand for crypto is that it's more amplified because it's a new asset and it's more volatile. Philippine stocks are volatile, US stocks are even more volatile. However, whatever you're seeing in crypto is at a much bigger and much more amplified scale. But that's a price. I always see Bitcoin as a piece of technology, a piece of software. What it was doing when it was at 69,000 versus where it is right now, somewhere around 17, it hasn't really changed. And I think that's one of the merits when you're looking at Bitcoin as an asset or even as an investment. Stocks also go down, but it's primarily triggered by when you're trying to analyze a stock. There could be portions in that stock where the stock is down is because earnings are down or their competition is getting better than them, or probably from a dividend perspective, either they stop giving out their dividends. There could be a lot of factors attached to it. But what's interesting about Bitcoin is it's not a company, it's a piece of technology. While I'm making this video, the miners are still verifying and upholding the network. The hash rate for Bitcoin is even higher. It becomes more expensive though now for miners to continue mining, but the large ones are still continuing. Just a side note also that when miners stop, I believe that we're closer to the bottom of every cycle when that happens. And also when you see a lot of people become relatively fearful, which is what we're also seeing right now. A lot of people are scared, a lot of people are fearful about crypto, a lot of people are getting out of the space as a whole. A lot of miners also are stopping. But what people need to realize is the Bitcoin network is still working. Transactions are still validated. From a technology standpoint, Bitcoin is still the most secure and the most decentralized network ever. And that hasn't changed even if the price has dropped significantly. If you love Bitcoin at 69,000 and the inherent technology hasn't changed at all, why wouldn't you like it more at 17,000? I think that's a bigger story that people also need to realize, that if you separate the price volatility from something that allows people to be able to store value in a decentralized way, then it doesn't become scary anymore. I actually said this during the talk that if Bitcoin is basically just a store of value or a way for people to actually remit, and it does nothing at all already, then it would have been still very, very, very game-changing already. We are talking about if it's so good, then the lower it actually is, and you believe in it so much and you understand it so much, then why would you be scared? Stablecoins, for those who are into crypto, you do know that a lot of them are pegged 1:1 with the dollar. It barely moves as compared to Bitcoin. It's more volatile. However, in this time where a lot of people are fearful, where there's a lot of uncertainty and doubt, I'd still pick Bitcoin versus any other altcoin or even a stablecoin. Why? Stablecoins are less volatile, but at the back of my head, I'm thinking, what if this collapses? What if this depegs? What if there's something bad that happens that could possibly depeg this and could hit it? And I'm not saying that it's not gonna happen, and I'm not saying also that it's gonna happen, but what I'm saying is, those thoughts of collapse, I'm not scared about Bitcoin that way. I do know that even though Bitcoin is volatile, the next 10 years, because it's the most decentralized, secure network in the planet, and it gives people the ability to store value, most likely it will still be there for the next 10 years. Whereas stablecoins, I know they're backed up 1:1, but you have to trust the company that's issuing it. Tether, Circle, you have to trust them. Whereas for Bitcoin, you don't have to trust anyone. And that's what's nice about it, because there's no company, there's no centralized authority that's actually saying, as long as you trust us and the reserves that we have, your assets with us are okay. For Bitcoin, it's purely proof of work. It's purely the algorithm protecting what you actually have. Bitcoin will still be volatile until we see mass adoption, until we see more governments put it as part of their reserves. But above and beyond that, the technology is just moving forward. So if you look at Bitcoin from that perspective, store value and to have something that's secure without a threat of a centralized authority going down, then it becomes game-changing. And the price doesn't even matter as much, because the lower it gets, the greater the ability for you to be able to actually stack more. And that's what I've been doing. I'm stacking. It doesn't mean that I put everything in one tranche. From a market perspective also, I don't know how low it could actually go. But from a technology perspective, I do know that it's something worth holding on to for the long term. So that's it for now. Marvin Germo. I hope you guys got a lot from this, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.